Welcome back. Still watching India now. Now, India's gold rush continues at Commonwealth Games. On day 10, boxers Mary Kom, Amit Pangal, Gaurav Solanki and shooter Sanjeev. In fact, before we get that story, let's get you the latest on the earnings front. Infosys looking for potential buyers for its subsidiary Panaya, and the acquisition of which led the boardroom coup at IT giant, which ultimately led to Vishal Sikka's unceremonious ouster. Meanwhile, on the earnings front, the company has reported a 2.4% rise in quarterly profit, and the company expects full year 19 revenue growth between 6 to 8% in constant currency terms. My colleague Rahul Dayama gets us a report on that.
It was an important day for Infosys CEO Salil Parekh as he presided over earnings after his first quarter as CEO. And it was obvious that he wanted to distance himself from strategy of the previous one, Vishal Sikka, because Infosys has decided to sell Calidus, Scava and Panaya, all remnants of Sikka's legacy. Panaya in particular led to a showdown between Sikka and the erstwhile board and Infosys promoter N.R. Narayan Murthy, who questioned the rationale behind the deal. Parekh played it safe, saying it didn't tie in his present strategy.
My sense of the market is we see a market that is in a stable to good condition. Our own businesses are doing well, as I described some of them. You heard from Praveen on the specifics of some of the other businesses within our mix. Given those external factors and our own positioning, that was a range of guidance that we developed. In terms of Panaya and Scava, we did a strategic review of our portfolio. We looked at where our strategy direction was, which is what I just described. It comprises of digital and core IT services and a strong suite of product portfolio, for example, Finacle, platforms such as Edge, Nia, which we are further expanding, and McCamish, which is an insurance platform. And within that strategic review, we decided to initiate active interest in Panaya and Scava from external buyers because it did not fit all of the criteria we have today for scaling our businesses, given the conditions we have for the business today.
Infosys posted revenues in line with expectations, while the margins came in at 24.7%, while the revenue guidance came in line with street expectations at 6 to 8%. Narrowing the margin guidance came in as a dampener. It will also pay over 10,400 crore rupees to shareholders in FY19. Salil Parekh has outlined a 4-pillar strategy for scaling agile business, energizing the core businesses while focusing on reskilling and localization efforts. While the management did not confirm if they are moving away from Sikka's strategy altogether, Salil's efforts will closely be monitored. Significantly, the board also said independent director Kiran Majumdar-Shaw has been elevated to lead independent director, fueling speculation on whether she will eventually succeed Nandan Nilekani as chairman. While Nilekani has been clear that he will stay as long as he is required, a degree of stability seems to have finally returned to Infosys after a year of turmoil. Ruchi Bhatia and Rahul Dayama, ET Now, Bengaluru.